MTN Nigeria Communications PLC has reported total revenue of 856.47 billion naira for the 9 months ending September 30th, 2019. Now, this shows an increase in earnings by 12.04% over the corresponding period in 2018. MTN, in its unaudited 9-month results released Wednesday on the Nigerian Stock Exchange, also increased its profit before tax by 23.95% from 171.03 billion naira in September 2018 to 212 billion in September this year. The company's chief executive in Nigeria, Ferdinand Moolman, said MTN's earnings before interest, tax, depreciation and amortization grew by 39.3% to 460.1 billion naira. This is due to increased subscriber number of 0.1 million to reach 61.6 million subscribers on its network. This increased active data subscribers by 1.6 million to reach 22.3 million active data users on its network. Now, much of the company's earnings come from airtime and subscription services, accounting for 62.32% of MTN's total revenue. Data services accounted for 19% of its revenue, while SMS and other revenue streams made up the balance. TEMITOPE JOLAOSHO, an analyst from a financial derivatives company, joins me in the studio to discuss the Nigerian equity market. TEMITOPE, it's good to have you. Good morning.
Thank you for having me. Good morning.
All right. So, looking at this week's trading session, what drove equities buying interest, you think?
Definitely it's because of the earnings season. You see that even on Monday the market lost, and then Tuesday it gained as well. So you see that, okay, because of earnings, investors have been reacting to earnings results. Yes.
Okay, so which stocks were the most gainers, as it were?
So in terms of most traded, it's still dominated by the banking stocks.
All right.
It's still dominated because, I mean, apart from the fact that they're the most liquid, and you notice that a lot of institutions and retail investors have exposures to those sectors as well. Yes, so it's basically the banking stocks.
Fine, which brings us to the next issue of the banking stocks and, of course, their corporate releases. So how would you gauge their performance in terms of,
so far performance has been mixed to a large extent, and then we've seen that quite a number of them reported a decline in top line. But we noticed that Tier 1 banks, almost all of them recorded increase in their bottom line. Even though if you look at GT and Zenith, it's marginal. GT reported about 3%, Zenith about 4-5%. But if you look at Access and UBA, Access reported about how many percent increase? Yeah, so but we expect that because that's as a result of the merger and the acquisition that was on earlier in the year, they recorded about 44% increase in profit after tax, and then if you look at UBA, about 32%. But for UBA, you see that UBA has a large footprint in Africa compared to most of those other banks. And then you look at even like you just read now, Access Bank is also it intends to increase exposure as well. And then if you look at the benefit of the African Free Trade Agreement, it tends to benefit significantly from that. So across banks, yes, it was mixed. But if you look at top line, generally decreased. And then if you look at bottom line, Tier 1 banks recorded increase in bottom line. But interestingly, you will notice that their interest income still represented a large percentage of their revenue, about 65% on average for all the banks. And then if you look at, you will notice that their impairment charges also started increasing. So you see that they recorded like about GT recorded about 59% increase in impairment charge, so which is significant for the period. Yes, so that was what we noticed.
All right. Was this figures only restricted to Tier 1 banks? What about some of the other banks?
Yes, it was across. It was. I mean, as I said, performance across all the banks was to a large extent mixed. But if you look at top line was generally either declining or flat. It was in between those. But we noticed that for Tier 1 banks, recorded increase in bottom line, even though GT and Zenith was marginal, but for Access and UBA, it was quite significant.
Okay, even talking about Access and UBA itself specifically now, do you see some form of healthy rivalry here? They're trying to stamp their footprint, although UBA is already established, but Access is also following suit. So
yes, like I mentioned, because of the benefit of the African Free Trade Agreement, and then the banks tend to benefit a lot from that. And then the banking space has been under a lot of let's say regulation, scarcity, yes. Yeah,
so, we've had much of it this year.
Yeah, so basically every other day you wake up to a new circular relating to the banking space. I mean, as much as it creates a threat, there's also an opportunity in that space. But like I said, the impairment charge for most of those banks went up. So what we noticed is that, I mean, they need to start looking outside the regular banking as we know it to be able to improve on their performances. And also, if you look at CPs that was issued during this period, you notice that about $400 billion have been issued by non-banks, which represents about 2.4% of banks' private lending to the sector. So imagine if this inflow had gone to the banks and improved their interest income. So there's a lot of financial disintermediation going on in that space. And also, if you look at if SEC decides to formalize crowdfunding, so most of these banks are becoming retail-driven. And then if that happens, so that means retails are having other alternatives to funding, and then you can see there's an increase in financial disintermediation as we speak. So, I mean, they have to look outside the box to be able to do that. So, which sort of supports their strategy to expand their footprint in Africa?
So, that means innovation also has to come in here.
Definitely.
Because we can see intense rivalry in terms of getting ahead. And
yes, and then there's likely consolidation in that space as well.
Yeah, true. All right, very good. So let's take a look at the telecoms sector. Things are a bit quiet here after the fanfare that greeted their emergence at the stock market. So what do you make of their activity so far there?
So we noticed that for the telecom, MTN and Airtel, they've been one of the most stable stable stocks on the exchange. And that's because at the time when they came into the market, portfolio investors had to realign their portfolios to reflect, and then after the initial rush, and then you notice that everything just sort of stabilized after that. And then because of their positioning in the economy, I mean, they are quite significant to the economy. So you notice that a lot of people are just holding on to their stocks. Nobody is actually really selling or anything. And you notice that the telecom space have one of the most attractive margins in the industry. Their EBITDA margin is about 50% compared to others. And then even if you look at other stocks, you can hardly count how many stocks can offer you dividend yields that are even above the current treasury bill rate. And then if you look at the banking space, for the banking space, right now it's only Axis Bank, UBA and Zenith that offer yields that are above the dividend yields are above current TB rate. And then, so that makes the telecom space very attractive.
Yeah, and if we could delve into the brewery sector as well. So what are your thoughts there?
So we noticed that performance for the brewery sector was to a large extent underwhelming, and that's not far-fetched because because of the new excise duties, and then they were not able to pass that to their consumers. And then you notice that Nigerian breweries reported about 44% increase in their excise duty charge, which which significantly affected their bottom line. And because their top line just grew marginally by about 2%, and then you're not factoring the cost of the excise duty. So we expect that once they increase prices from today, I mean, that should be able to support their margins, even though the margins are currently contracting.
Indeed. So obviously they have to do some and despite the fact that a lot has been spent on marketing, and you wouldn't expect this result. All the same, your thoughts on the oil and gas? How's the current global pricing affecting Nigeria?
So currently, in terms of the oil and gas space, the result was underwhelming as well. And I mean, is expected. I mean, well, to a large extent because of what is happening in the space, in the downstream space to be specific. Because if you look at the upstream, Seplat's performance was quite impressive compared to the other downstream players. And then that's, I mean, expected because Seplat had a significant decrease in their finance costs because they had a deleveraging sometime last year. So their finance costs went down significantly, over 50%. So that sort of improved their own performance. They reported about 130% increase in their bottom line. But if you look at the other players, Total, 11, and Oando, their performance was to a large extent not very impressive.
So would you say to a large extent weak market sentiment still prevail this week on account of all these results and the overall
we've noticed that at least for like 3 days in this week now, the market has trended upwards, which is like as a result of reaction to result. But going forward, we don't, I mean, it's mixed, so to speak, because, I mean, the declining interest rate environment under normal circumstances should have a positive impact on the equities market. And also, as you move towards the end of the year, portfolio investors will want to realign their portfolios, and then they might have to buy in some stocks. And also, individuals might want to take advantage of the low prices and level up their average cost for their portfolio. So yes, to a large extent, it's right now is still mixed. Yes.
All right. So in the FX markets, more stability there?
Currently, there's stability in the FX market, but that's quite tricky because of what is going. All the seculars, the CBN is increasing, so you're not particularly sure. Okay, yes. On the other side, you have to keep rates attractive for foreign portfolio investors to stay in the market. On the other side, they want to stimulate growth in the economy. So I mean, there is sort of what do I call it? Confusion as to which direction, which one outweighs the other. Really, yes. But generally, we expect rates to decline, and definitely should have a positive impact on the equities market.
All right, TEMITOPE, JOLAOSHO of Financial Derivatives, I'd like to thank you very much for your thoughts on these issues. Always a pleasure to have you.